To keep you updated on the capital and financial markets, here is a recap of what happened.
Total assets invested in China's mutual funds have topped 30 trillion yuan for the first time, reflecting increased demand for risk assets among investors looking to put an abundant pool of cash to work at a time when the property market is a poor option. The industry had combined net assets worth 30.78 trillion yuan as of the end of April, an increase of 5.4% or 1.58 trillion yuan from the previous month, according to the Asset Management Association of China. These assets were run by 148 mutual fund managers, among which 51 were wholly owned by foreign investors or joint ventures, the data shows. The data indicates some success for the China Securities Regulatory Commission, which has been trying to cultivate institutional investors as one of its long-standing goals. While China's capital market is already more than 3 decades old, trading is still dominated by individual investors, who tend to amplify volatility by chasing rallies or selling on declines. China has 220 million individual stock traders, the most in the world, according to the data by the clearinghouse. The Securities and Exchange Board of India introduced new regulations on the 24th of May to govern the sharing of real-time share price data with third parties, including various online platforms. SEBI has issued guidelines to curb the misuse of such data, particularly by online gaming platforms, apps, and websites that offer virtual trading services or fantasy games based on the movement of real-time share prices of listed companies. It has been observed that certain online gaming platforms, apps, websites, etc. are providing virtual trading services or fantasy games which are based on the movement of real-time share prices of listed companies. Some platforms are even offering monetary incentives based on the performance of the virtual stock portfolio, said SEBI. To address these issues, SEBI has issued various guidelines to the market infrastructure institutions including stock exchanges, clearing corporations, and depositories and registered market intermediaries. Emerging markets such as India and Indonesia, whose populations are growing at a solid pace, stand to benefit as demographics begin to play a bigger role in investment decisions, according to Fidelity International and BlackRock Investment Institute. The investors are focusing on the two nations in emerging Asia, thanks in part to an expected boom in infrastructure spending, which in turn bodes well for the country's economies. Both India and Indonesia coincidentally had elections this year, showcasing to the world their ambition to transition into major economic powerhouses with their dynamic population being a key strength. The two countries stand out at a time when rapid aging has plagued peers in the region, including China. India surpassed China as the world's most populous nation in mid-2023, a historic milestone that unleashed a rush to identify potential winners in the South Asian nation's stock market. ESG was near the top of just about every top executive's talking points just a few years ago. Now, tired of drawing flack from activists on either side of the political spectrum, many CEOs have decided to bottle it up, particularly in the US. Bloomberg scrutinized transcripts of financial presentations by the 100 biggest European and American traded companies during the latest results season and found a sharp drop in references to environmental, social, and governance issues. Emerging market stocks and bonds are already an important asset class for fund managers. But in Asia especially, emerging markets also represent an important source of potential new business for pension fund managers. A new report from the Asian Development Bank, Aging Well in Asia, paints a picture of a region which, while renowned for its post-war economic miracle, is generally not well prepared for the rapid aging of the population in a number of countries. The coverage of pension programs in emerging Asia is generally low, according to the report. Economic security in old age requires stronger pension systems and financial preparedness. In developing Asia, which includes most of the region, the proportion of those aged 60 and older is expected to double to around 1.2 billion in 2050, or 1 in 4 of the regional population. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.